trade. It looks like it's going to be a green open, guys. Did you hold? Did you hodl yesterday? Did you get fearful? We hit many supports. If you haven't already watched the daily, see you soon. Enjoy these trades. What's up, everyone? Welcome to the stream. How you guys going today? There is a lot going on in these markets, isn't there? Wow, wow, wow. But have we seen the worst of this correction, or is there something bigger on the horizon? You know, it's interesting. We think about some people that have been calling crashes. We think about Burry, obviously very famously called the crash recently. Now, I won't say that Burry hasn't picked them correctly for a long time. He has, but he's always been remembered quite early. So he's not doing so well right now. But let's look at the facts. And the facts are starting to look more bearish, there's no doubt. However, we're still on the support. We're still exactly where the market has always bounced so far in these corrective pullbacks, at least now for the last couple of months. So it's do or die in terms of the markets today. Very clearly, this is the key zone, and we should be able to see whether the support and resistance work out. So we're going to open up here. It looks like green. If we rally, I expect the 20 moving average on the daily to act as resistance, which you should use the SPX here for. So look at the SPX around that 43.10. If we do rally, I expect some selling to happen around 43.10 from scalpers, from day traders taking profits. And that is what, you know, a lot of people are thinking about. A lot of others will say, Tom, we're going to fill the gap. Valid. Usually before a crash takes off, and we're going to be taking a look at that today, we usually see the peak, the trough, the lower peak, lightning bolt combo, or at least a double topping pattern or something like that. That is just incredibly synonymous with proper pullbacks coming through the markets. Now, what did we see last time? Let's have a look back into the history. There's, of course, the pandemic. Well, that's not going to show the same type of technical, is it? Then we go back over to 2018, arguably the last time it really did a number on everybody. And what happened? We didn't get that much of a warning, actually. It basically just went down, hit the 50, remember that, bounced a little bit, and then completely got obliterated underneath that 50. So I think that, look, when you go back through history and you go back and learn at some of these corrective times, there's always going to be one or two signals that you're going to get. One of them might be peak, trough, lower peak, lower trough. That's the perfect one. The other type of thing that you want to be looking at generally is going to be an extension away from the weekly 20 moving average. And we've talked about how that is my number one thing that I always look for. How far are we away from the weekly 20? And when we get really far away from it, I start to get a little bit scared about the market. So it's do or die. We're on the 50. Let's see what the community has to say. Thank you very much as well, Allah, for subscribing. Appreciate that. A few other subscribers coming in. DAP as well. Great to have you here. Bloodbath McGrath says bonds are for rich people. Technically, yes, the bond market is massive, but when you're buying exchange-traded funds of bonds, then you can just take advantage of the bond market. Now, I did discuss how I thought the bond market was on a run. Anyone that's been following the last couple of weeks, we've been talking a lot about this. This was a classic kind of, support being found, peak, trough, higher peak situation. It's eventuated that this has been the better investment than the market itself, unless you're in specifically great stocks such as Nvidia into that high originally. And we are on the way, you would think, to at least this 140, 154, 65 level. Around here, I expect it to have problems. Now, what's the bond market telling us? Well, firstly, let's just look at the rules of, let's bring out the notepad. We've got to bring out the notepad, guys. Okay, so let's just think about what the market is telling us. So number one, what is the bonds market telling us? It's telling us potentially bears coming, okay? The bears are coming out. They're done with hibernation. They need the salmon, and they've got 3 months. Remember, whenever the bears attack the market, other than pandemics, other than GFCs, global financial crisis periods, generally 3 months. No more than 3 months. It is 3 months from top to bottom to recovery again. That's what you usually start to see. So when the bears come, remember they're only attacking salmon when they're swimming up the stream. Then they all die, and then the bears go to sleep. That's pretty much a good analogy, I think, to do with the market. So bonds, bears coming. Dollar index, risk off. So that would also be bears coming, all right? From the perspective of, if we have a strengthening US dollar, what is this telling us? Well, firstly, the US dollar is doing good. It doesn't look like the printing press is going at any more extreme speed. In fact, the discussion is about pulling the press back a little bit. And I know that's generalization. Some people get annoyed when I say the printing press, but it's all right. And basically, every other country is also doing monetary policy. So we've got the dollar index showing incredible strength here. We've talked about it. The weekly close, never ignore that. If you're going to take one thing away from the channel, and one thing only, never ignore the closure candle versus even the break. And people that have been trading dollar index this week, congratulations, because it's doing all the right stuff. Let's hope it can continue up here, because the dollar index strengthening, hey, it's good for me. Hopefully it's good for you. I'm in Australia, so if you guys in America have a strong American dollar, it's great, because it means my dollar is getting weaker. And when you're invested in the best market in the world, by the way, it's never bad, yeah? So bears coming from the dollar index standpoint. Risk on, risk off is the kind of principle. If the dollar index is strengthening, it generally means people are buying dollars. Why are they buying dollars? Where are they putting money? They're taking it from the stock market. So that's one of the things. Somebody said here, Sorta says, bears going to get your honey. Oh, yeah, I forgot about that. What was it? Boo Boo or something? Hey, Boo Boo or something. I can't remember. Was that like, what was that called? Some cartoon from back in the 70s or 80s or something. I forgot even what his sidekick was. I never had Cartoon Connection as a kid, guys. I never had the Cartoon Connection channel, unfortunately. Too poverty stricken for that. We were on the farm, the farm. All right. So we've got here resistance, and then we've got the breach, then we've got the pullback, and of course the follow through. Let's just have a quick look here on Yogi Bear. That's the one. Yeah, Yogi Bear. I was just thinking about Popeyes the other day. Popeye. How they used to have like a guy that eats, spinach out of a can, and then I think his wife's name was like olive oil or something. It's some bizarro stuff back then. All right, so we have here resistance supports, definitely looking bullish. New high, that's great. Bears coming from that standpoint. US 500, mega support at this stage. Mega support. All right, US 100. It's on the daily. Look at that, the daily 20. Let's look at the QQQ, because of course that's the real close. Close just underneath the daily. However, the daily 20, remember, I don't see it as if you gap under and you find bullishness through that day, that is weakness. So I think what we've got to be very careful for today is, I believe there could be bullish action here in the morning. But I also think that there's a chance that we go fill the gap and then potentially find weakness and put pressure on the downside again. And we're just putting together all of these different things. And this is something I always do. I just go like this. Let's go US 100. So we'll go US 100. You guys know that's the Nasdaq. We'll go neutral at this stage, okay? Because it's on support. S&P 500, we've already analyzed that, and we've gone with neutral at this stage. Why? Because it's on the 50 exponential. If we move over to the Dow, remember they all sync together, guys. Why are they all on? Look, they're all on supports. Oh, what a magical thing that is. Why are they all on supports? Because technical analysis is great when you understand it. You got the trend line here, okay? Dow is also neutral at this stage. Neutral to bullish, this means. So we've got the US 30. Because we don't want to panic. I don't know if you guys like this stuff, but anyway, I'm going to write it down. Then what else have we got? We got the IWM. Now, I'd argue for this potential, let's call it crash correction, I actually might think, I think the S&P 500 is incredibly important. But I'll also be watching this one very closely. We've talked about the weakness through the smaller stocks shows true weakness. Let's actually have a look here at previous years, okay? So let's think about the 18 fallback. Now, that was notoriously a trade war, which hit mostly tech. Okay, that was the beginning of the trade war. So we did get a massive sell-off here as a percentage. Remember, that's a 27% sell-off from the IWM. And we go through previous history and we think, well, has there been any other time that we've ever seen such an interesting pattern? And I would say probably not. This is a mega channel at the top of what has been a miraculous recovery. A lot of people don't know how much percentage is here. 144% from trough to peak on an indice in 12 months and a bit. Actually, it was 12 months. Phenomenal. 144%. Then you go and look at the Indian market and you think, well, come on, Tom, that's not even very good, man. It's not even very good. I think it's a lot for the small companies. So we've got this one on support opening here at the 212. So it's actually going to be opening just around that gap. So we go with the IWM, the Russell 200. We go with neutral to bullish, okay? So we've got every one of the indices so far neutral. We've got bonds and dollar indexes. Obviously, they're lead indicators showing us bearish action in the market. And then you would say, well, what else can we use? Well, we'd also use the US 10-year. The US 10-year is disgusting right now. This thing is 1.1590, okay? The US 10-year is horrible. Just a few months ago, all you guys were saying, I think it's the beginning. It's the beginning of inflation. Well, that didn't work out. And Michael Burry's not happy with his position right now. His 10 years look horrible. I do believe this will turn around. I also do believe that monetary policy is not inflationary. Look at Japan. Something about when you think about things like big data is why not go and look at what's worked before? You know, if you're going to go and buy a house, let's say you're buying a house in California. California's damn expensive. Is California moving in house price right now? Probably in certain areas. However, you go down to maybe Florida, let's call it, or around that area. All of a sudden, you've got people flocking down there. And a lot of the people there might not want to sell their house to you. They don't sell it. They hold it back. Creates scarcity, drives prices. Lots of people looking, not much stock on the market. That's the type of thing that you want to always think about. It's just this basic human psychology. This market is the same thing. We've got the 10-year coming down. We've got to put it in perspective. What happened in the global financial crisis? All right, let's have a look. Let's have a look. So we go back in time. Where are we? Here we go. Okay, so we rallied. The 10-year went up. Very good. Went up all of 2009. Then, strangely enough, May 2010, 1 year after the recovery, the 10-year yield dropped substantially into October. Interesting. At the same time, we hit literally all highs around March over here, and we're dropping into a very similar time. So I am actually linking most of my investment, most of my trading psychology with the global financial crisis recovery. And you might say, oh, it's a different thing. It's different this time. It's different. Yeah, it is. We need to understand that that there isn't going to be as much profit to be made in their energy stocks and the financial stocks and stuff at long hold scenarios, okay? I don't believe in the financial sector the way I used to. I just don't. But I believe in the new fintech style companies, as you guys know. I also believe that there's a huge chance in technology here, a huge chance in biotech, a huge chance in all this stuff. So we have to put in perspective, are we concerned about the 10-year? No, I'm not. Do I think it could come down further? Absolutely. Do I think it could get down here to 1 or something? Yeah, why not? And around there, I would expect it to start turning around. What do you guys think about that? Let's see what you guys think. Floods all over Europe also, says Bloodbath McGrath. And creating inverse head and shoulders. What's this, Jimmy? What are you saying, Jimmy? Where are we? I hodl, use patience, and wait on the numbers that show it is ready to move up. Know where you want to be and never go all in and never go all out. Shizzy Whiz Nut. You are correct. You don't want to ever fully scale out. You want to know when to hold them and know when to dump them, yeah? And you need to have, like, some people call it like core satellite, all right? And I can't talk about any more than that, but you can search it up, because obviously it's an educational stream, educational, guys. But people have core satellite style approaches, and that's actually a hold or hodl. You're hodling, and then on the other side, you're not hodling. You're kind of making investment decisions. It's all good. You can make your own decision. Obviously, consult your financial advisor whenever necessary. But there is a whole bunch of things that you can look at and think about when you're creating these type of strategies, creating whether this has happened before, feeling the data out to see whether you need to be fearful or not. So we've got the 10-year yield. And you would say, okay, well, the US 10-year is coming down here. Isn't that bullish for stocks? You know, in some ways it is. It's bad for banks. So the 10-year coming down obviously is good for growth, technically. So it's like, you know, perceived good for growth. So you would say growth bullish in this case. I don't think it'll hold down there, but that's the perceived way. I don't think there's actually that much correlation with it. Everyone says in the mainstream media, oh, it's all correlated, blah, blah. It isn't as much as you think. The 10-year is not necessarily going to flog your growth companies such as the Nasdaq. So we've got the 10-year going down. We've got the golds going up here. Now, contrary to popular belief, gold is not a great signal of... I say it sometimes on the videos just because we put it in there as the header, but realistically, if you think about it, gold rallies randomly, okay? It rallied off the global financial crisis. It continued to rally through fear, and then it dumped. Now, does it dump in line with the market? Well, let's answer that question. We got March here, April, and then we get to September 18 and it starts rallying. If you correlate it together with the market, it's not as correlated as you think. In fact, sometimes the market will get hit and gold will get punished as well because the dollar index strengthens. So while I'm bullish on gold, you guys know that I like breaking that 1817 today. We are still not using this as a strong correlation to the stock market. That's my personal opinion. It looks like an inverse head and shoulders in some ways as well now. Let's have a quick look here. Very nice. Left head, right, breaching at this point. You can see that breakout there. Hopefully it does go up. And it is something that we should pay attention to because it is basically gold month. This is the type of month that gold does quite well. Love the numbers here. 1,337 viewers coming in early. Hopefully you guys are enjoying my rant so far about the markets. We've got a lot to talk about. I know crypto is getting bashed for crypto fans out there. I'm very sorry, guys. That sucks. But unfortunately, it's not great. It's not great. Let's have a look here. Ulrich Nielsen, Super Chat DKK, $50. In my opinion, we've put in the top and every single bounce from this point will only be an opportunity for Wall Street to position more shorts. Look, Ulrich, I think you are bringing up a very interesting point here. We are in earnings season. We obviously are seeing all these stocks react to earnings and how they're reacting to it. And we have a lot of sick stocks right now. Let's have a look at some of our short potential stocks that we've been hating on now for a few months. DE, John Deere, for anyone that doesn't know. I don't know what they make other than tractors and machinery and some AI, but I want to put this in perspective of why I dislike this company's valuation. Come on now. That is a sugar rush company. Please, come on now. That's not possible, guys. And I think that when I see this, I laugh because we know, we can quantify how good this stock's going to be over the long term. We also know eventually it will come back to its monthly 20. And it has gone so far above it. That's why I dislike the old John Deere. And that's one of them. Another sugar rush stock. Old car, Avis, something I did not like. Caterpillar, I did not like. And of course, Build-A-Bear. Ridiculous. Build-A-Bear is ridiculous. Get out of here, Build-A-Bear. You can't be going up that much without getting some pain. Now, that's just a very small section of some of the things in the market, but anything to do with reopening, anything to do with the strain, I guess you would say, is getting belted at this stage, and that is going to make it hard to make new highs. So I'm optimistically bullish, but I've told you before, and I'll say it again, stats like this, where are they? Stats like this one about the Russell, I can't ignore it. And therefore, it doesn't mean that you have to be, oh my God, I'm so scared. It just means that you have to understand that this, like just on our notepad, is there anything good here? Remember, US 10-year will mean banks bearish, which we'll take a look in a second. Banks are bearish. And what generally leads market corrections? I'll let you guys answer it. Let's read this other one while you guys answer what generally leads market corrections, other than, of course, IWM in many ways. We've got John Moore super chatting $5. My mum is over concentrated in Triple M, which she got from her dad. Diversifying means 20% capital gains tax on most of it. If and when to sell. John, man, you know I can't answer that. Triple M, so it's a fairly defensive kind of stock. I can't give you taxation advice, bro. I appreciate the fact that you like it, but I will have a look at the technical analysis levels from an educational standpoint, all right? So let's see what everybody says. So Shell says Dow Transport's definitely one of them there. It's a good point, and you will bring those into your thing, which we might have a look at a little bit later. So Dow Transport's is one that you should use. And many people are saying financials, lack of buyers, and a whole bunch of other things. Jimmy Bireri says, Tom, I've watched a lot of people on YouTube who think they know what they are talking about, but you are the only one who understands parabolic rises in stocks are unstable. I guess the thing is, look, I've been doing this for a while. You have to have gone... I came in the global financial crisis. So I saw that. I saw the first level of monetary policy. I got really serious about it. 2010 went crazy. You know, that was when I started just putting in those time in the charts with Tyrone, you know, my business partner. We did a lot of time. We obviously ended up with options as one of our favorite things. Technical analysis and options go hand in hand. And it's really about, you got to cut the crap. It's like anything in life. How do I say this? If you go and you listen to any one of these experts online. And look, I don't have an agenda so much because I'm not pumpy dumpy stock or anything like that. I'm not sitting here on a penny stock going like, you know, crazy about this. Of course, I've got an agenda from my business side. There's no doubt. You're not going to deny that stuff. But what you need to remember is when you see somebody say, oh, the end of the world's coming, or, oh, buy this stock now, you know those guys have positions. Please, they have positions. The other thing is whenever you read about it in the media, remember these guys' jobs is not sitting there in front of, you know, Bloomberg Terminal all day or Reuters or whatever else, right? Like, you know, really analyzing the stuff. They've got to put out articles and they get paid like $50, $100 per article. They're just spamming stuff. Spam. They're not putting in the due diligence that you should be putting in. And if you want to know how to put in due diligence, use Coifin. Free service. I'm not affiliated with them. It's great. The community showed me that one. What a sick, great thing. Where else have we got? We got another one, I think. That is not it. Where are we? Do I have it up here still? No, I don't think I do. But I might share it tomorrow on the stream. Make sure you subscribe if you guys want it. Get into the Discord group as well, and I'll share it. So Coifin, Ticker. I've given away plenty of free codes for Ticker. Again, not affiliated with them. But you should use those types of programs to educate yourself. And anyone that trades TA and says, oh, I don't do fundamental analysis when I invest in stocks. I don't look at the big data and the big picture. I'm telling you, they're ignorant. They are ignorant in some ways. Now, if you're trading a 5-minute chart using technical analysis, of course, you don't need to do much. Why would you care about the big picture? You're trading a 5-minute chart. But if you're trading, let's say, or investing over a long period of time, you put the fundamentals together with the technicals, together with the big data, the actionable data, and you cut through and you have your own. And some people have been messaging me today and saying, Tom, I'm not freaking out. I've got my plan. That's great. If you have a plan, and you know that if this and this and this happens, you can act on that plan. And the only way you can really do that is by looking at actionable data. And I'll be talking about that, as I said, more in the future. It's going to be a big part of some of the things that I want to share with everybody. And of course, you know, with the members of the private community. So there's a lot of stuff going on here. One of the points of actionable data you can even look at is obviously going to be options as well. What are the big players doing? What are the big players doing? We will chart Nvidia. I know you guys are loving Nvidia, so we'll chart that. We'll just go over here to MMM, so the triple M's. So firstly, this company is incredibly defensive. You know, it's not a company that does, it's a boomer company. It doesn't do anything in particular. It obviously has recovered well. It's right around kind of a resistance at 216. And it's one of those ones that will just gradually increase. Now, the reason why I think 3M is in a decent position is because as you see the economies open up, people will get, now, as far as I understand it, people will get surgeries, they'll get all these things. 3M provide a lot of this stuff, and all of a sudden there'll be more of a demand on their products in many ways. See, people thought originally, oh, 3M, they produce masks. They're going to make so much money during the pandemic. So great. Well, yeah, they made some money on their little mask division, but they're so much bigger company than that. You got to cut through it. Just because the media was like, oh, yeah, buy this, buy that. It might make sense, but how much does that break down into the company's actual earnings? So in this case, you'd be looking at around a 220 from a technical perspective, and you will notice that you have previous resistances there. But it could go decently for years, but it will be very, very slow. This is not the stock that you're trading and you're thinking, oh, I think this is a massive boom kind of stock. It just really isn't. Jimmy Biera says, Tom, I've been investing for a long time and I've never looked at a financial report in my life. I use technicals and common sense. I know that may seem ignorant, but my experience, my run by. Jimmy, it's not, yeah, but one thing, when you're saying common sense, you still understand where the government money and the data is going, yeah? You still understand the bigger picture. Is that correct, Jimmy? Answer me if you can, man. Because really what you're doing is you're using technical levels, and I'm pretty sure you're also probably buying quality rather than crap. So if you're buying like weird penny stocks, you're probably not doing that. You're probably buying quality. And yes, you're right. If you're buying Apple, you don't really need to look at the fundamentals of Apple. The chart is showing you the fundamentals of Apple. You know Apple's solid, and in the back of your mind, you know that company is really, really great. But still, if you bring it together with other stuff, when you're looking at buying dips, when you're looking at doing those things, you can, of course, give yourself confidence to hold the trade. Now, you might be confident anyway in your technicals, but imagine if you put that with the idea of knowing, oh, I know that the PE ratio is good, the price to sales ratio is good, I know that it's growing, I like this new business venture they're going into. These things just make you be able to hodl the position longer. Echo Aurora, $2 TA on Square, loving the weekly on this. Yeah, we'll check that out in a second. Okay, so Nvidia. All right. Down 75.16%. Imagine if you saw that. You'd be like, whoa. Down 75.16%. That looks pretty bad, doesn't it, guys? It's split day. That's why. Now, this chart will actually be jigged so that it's going to be in line with the split. No need to be concerned. It's split day. That is why it's down 75.16%. But one thing that's interesting about Nvidia, and it's like any type of data that you want to be doing, is you want to be thinking about how can we figure out what the nasty Wall Street people are doing, all right? How do we know what the nasty Wall Street people are doing? And one of the things that we can do is we can look at large equity positions, all right? So this is our Discord community, and anyone that's in the private Discord community will have access to this. You scroll down, and I'm adding all this type of stuff. Now, I'm deleting things that I think are totally useless in these types of robots and putting in things that are worthwhile. Because, again, it's about cutting out the crap. Now, do you use this and go, oh, I see they're buying it. I see they're putting calls in. These are all bought positions, by the way. So bought call, bought put. Do you just buy it or sell it because they're doing something? No. But what you do is you can bring this together with your technical analysis to know that people are striking positions. So yesterday we got some decent strikes here. So we got 20th of the 8th expiration, 2600 strike Google position, 448K premium, not bad. We've got an Amazon 870K premium call sweep here, which is a pretty big one, 30th of the 7th. Okay, so decent ones. Now, it's more about if they're positioning in quite a lot of these types of positions. Look at this SE one. Wow. 260 strike SE, 21st of the 1st, 2022, 1.3 million on the put. Wowzers. They are negative on SE. That's a big one. That's the golden sweep, guys. When you see that one, you pay a little bit of attention. So yeah, overall, these just help you go back to the technicals, and then you can say, well, does it make sense? Are we at a support? Why are they buying at the close? Why are they entering a call position? How many of them are entering call positions? Following that flow, plus the equity trades themselves, which are in there as well, can be helpful. Let's see what Jimmy said up here. Jimmy Barrera, what did you say in answer to me? Jimmy says that is correct. That's common sense. Yeah, but you'd be surprised how little people don't have the common sense, Jimmy. Do you know how many people don't think about where the government money is? They don't think about the policies. They don't think about... I mean, how many people do you know that go and buy brand new off-the-plan houses in suburbs that literally have farmland all around them that's going to be more subdivision and more subdivision and more subdivision and more subdivision? Now, I'm not saying you won't get a beautiful house and you might buy it for other reasons, but if your aim is to buy for investment purposes, there's a lack of scarcity. And I hate to bring it back to housing all the time, but it's the easiest way to explain it. It's all about that scarcity principle. Effectively, a stock going up is because someone's hodling it and someone else is like, oh, I want it too, and they're paying more money for it. Someone's like, well, you got to pay me more money, bro. I don't want to give it to you right now. You're not getting it. Quick thing, market flat coming into the open. It's going to be a very, very important day for anyone that's joining us. Welcome to the 1,515 new people viewing it today. It's great to have you here. So Nvidia is going to open up massively down. It's going to be hard to, really do TA on it until we get the split completed and fixed. So don't worry about that one too much. We've got Echo Aurora saying TA on Square. All right, let's have a look at it on the weekly for you, sir. So daily looked really good yesterday. Great rebounds here on the squares. It's up pre-market 1.48%, which is good follow through. Weekly looks good, but as you know, Eka, we are so early in the week right now. This is not exactly where it's going to close or anything like that. Now, if we think about Square as a stock, we have rejection, 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 long leg doji, indecision again, so it's stuck within the range, and now we've got this bullish kind of movement. It's essential that Square doesn't go negative this week. So Square must continue to follow through. So I don't really I discount yesterday's trade on Square because it bulled hard into the end of the day, and it looks like it's going to get that volume momentum in the morning, which is usually a great sign. If you have a bullish hammer and then you have follow through like you've got right now with the 237 over here, that usually starts to eke out further bullish pressure, especially if today closes bullish and the market starts to buy up a little bit here. So we've got some call options coming in on some big stocks like Amazon, Google, etc. And then we've got Square also looking relatively good, Eka. Relatively good. Yeah, I'm just looking for that further momentum. As a day trader, you might actually just look as a percentage above and just go, okay, I'm in. But yeah, it does look all right. And if it closed like that for the weekly above this point, that would also be quite bullish. Can you check the SPY? Armin says, yeah, we've done the SPY quite a few times. So we've got no problems with the SPY at this stage. We're obviously daily 50 exponential as being support. That was the level that we expected yesterday. It's been common that it's wicked through that zone. And the other common thing is every time so far, and we can only go with the technical concepts, that it's come down to this moving average, it has bounced as a green day. So has there been one that didn't bounce as a green day? Well, no, not the first touch. Green day, green day. It's like the band, green day, green day, green day, green day, green day. So almost every single time that this thing has come down to the 50 exponential and it's just held there or closed around there, it has bounced the next day. Now, that's not saying that this thing's going to the moon or anything and you've got to make your own decisions. But if we just use the statistics of what's happened so far, it has always gone green. Would you guys agree with that? The first touch. First touch close, it's gone green. You guys, what do you think? What's the chat think? 6 minutes to Bezos launch. Can I watch the Bezos launch on the stream without getting flogged? I don't know. Thank you very much for the donations as well, guys. Thank you as well for the members that have stuck with us and everybody that's been, resubbing and stuff. I appreciate all of you guys. It's awesome to have you here. I hope you guys get as much value as you can out of this. Just to reiterate, these are the current situations that we have right now. So the markets are neutralish to bullish in terms of support. However, we've got some outlying kind of factors such as bonds, dollar index, 10-year, banks, Dow transports, all bearish. All bearish. Mr. Patex21 says, no, I don't agree. Really? What don't you agree with? It did go up every single time it came down so far. Down, up. Before this point, even over here, it bulled every time. So you've got to go with, like, that's how it's been. That's how we've been calling it. That's how we've been doing the education on this stream in terms of looking at the TA for months now. For months, this is what we've been discussing. We've never not said that. Now, if it closed underneath the 50, no. We don't want that, guys. If you're a bull in the market, no. we don't need that stuff kind of going on with us. Let's have a look at some other stocks here. Let's see what else is going on in the markets. We've got people wanting to look at the barbers. Let's have a look at the barbers. Stupid barber. All right. Old barbers. Right on the support right now, guys. 200 being the key support. Right now, it's kind of, filling that gap at about 208. It's coming in at 0.1% down. Look, the problem with Barber is, as we know, the government stuff, all of that's a big issue. We also know that there's so many of the Chinese stocks are right on support. I mean, you've got Baidu completely across support. You've got JD, coming down and then obviously finding a little bit of buying pressure. It's down here in the morning. Every one of these stocks looks really sick. I just want to see some follow through. I mean, it is on heavy support. Don't get me wrong. You got your trough. I mean, ideally maybe a peak, and then you got higher trough, and then you get higher peak, and then hopefully it signals up. But look, unless you're looking at it from an investment perspective, that you're basically just trying to catch the dip, and you're catching it at the best zone that it's been at. This is a multi-year trend line. Multi-year trend line. So it's the best zone it's been at. I don't know what's going to happen with it. I don't have a huge amount of the fan. Darth Sidious, Super Chat, $2. Is Nvidia down 75% due to the new graphics cards? Yeah, that's exactly right, Darth. That's exactly right. Well, why don't they just give me some graphics cards, rather than holding them back from me? Stupid Nvidia. No 3080 still for me after all this time. Ridiculous. AMD, speaking of that, did bounce yesterday. It seems like all the technology did pretty well, and I think that's probably a good time for us to have a look at the pre-market here. Let's see what's going on in the pre-market. Okay, so we've got Peloton up 5%. So it's kind of like, what I feel like this is? Think about it logically. We've got 10-year down, okay? Now, when the 10-year was down, and we had a strain variant concept, which was in that case COVID, the start of COVID, what bulled? All of the COVID plays, guys. All of the COVID plays. The T-Docs of the world. The Pelotons. The Squares. The whatever else there was at the time. Those were the stocks that did well. Remember back, they were the stocks that went hyperactive. So where is most likely Nasty Wall Street putting their money into things? They are buying into these stocks. They are buying into the, let's call them work at home style stocks. And especially the ones that can be sold anywhere in the world. And I believe that's why you're seeing that pickup in Square yesterday. I believe that's why you're seeing that pickup in things like Peloton, everything. It just makes logical sense that that's what's going on. So all the stocks that did well at the beginning of that whole March into April period, they're the stocks that people are picking up. So it's a tech-driven, but not necessarily driven by the Amazons and the Apples and the Googles. It's probably driven by the hyper stocks. is probably driven to the hyperstocks. Darth Sidious, thank you very much for the super chat there. David G, $4.50. Coffee symbol, thank you very much, man. Coffee emoji, great TA, Tom. Thank you very much. No worries, David. Appreciate your support. I'll grab a coffee on you tomorrow. Wearing the mask, obviously, that I have to now. Big Dipper, super chat at $5. Better investment, buy Amazon or shop? Big Dipper. Big Dipper. Do you buy the stock that's very highly priced or the other stock that's very highly priced? You're asking about investment concepts. I mean, many people will probably hear in the chat. I mean, what's the chat thing? What's the chat thing? They can actually tell you the answer. They can say stuff. They can say whatever they want. They got no problems with that, of course. Look, from the perspective of which one do I like more, I mean, I would go with the safer concept being the Amazon. From my perspective, I can't speak for you. And that's really just because I get shop. I get they're smashing it. But at the same time, I kind of feel like I don't love the moat as much as I love Amazon's moat. And I always talk about moats being one of the biggest things that I invest into. I like the idea that no one can touch me and it's too expensive to touch me. Shopify, what do you guys think? Do you reckon the moat is big for this company? Yes or no? Do you reckon it's big or is it small? I also like the fact that Amazon have that they're competing with pharmaceutical drugs that they're going to be releasing, and of course putting, you can ship them to home. They're going to have a prescription-based service, obviously competing with TDoc. I think Amazon might struggle there a little bit. However, they're trying it. That's another great field for them. And they've just got that inbuilt safety growth concept, and they've got the cloud, and they've got they've got everything, guys. It's all about the moat. Carlos says, what the hell is moat, man? Okay, so moat is basically, it's pretty much what you're looking for is that no other companies can compete with it. So if you look at Warren Buffett's philosophy, one of his biggest philosophies is that you think about it. If you're in a castle and you want to protect your castle, if you have a moat around it with alligators in it and you bring up your little drawbridge and they can't get over, then they can't get over. It's going to cost too much money to get over. It's not worth attacking your castle. They go to the next one. It's like saying Disney. Can you really compete with Disney? Very, very difficult. There's an argument to be said that there's some companies such as Microsoft, such as Apple, that can't be touched other than by governments. They've got so much competitive advantage. It would cost billions and billions and billions, if not trillions of dollars to get into their businesses. And that's what you want to do when you're investing long term. You want to think, not only do I love this company, but they're building a moat. They're building speed. People don't understand DoorDash, Uber Eats. All of these companies suck right now. They all lose tons of money. They all lose tons of money because they're trying to establish a moat. Effectively, they're getting customer base. They suck it in. They get so much customer base that they can scale it out. And at the end, there's only 2 or 3 left standing. And then no one can touch them for the next decade. I like it when no one can touch them. That's the point where I like them. Let's keep looking at a few stocks here. To answer that question, I guess the chat would say Amazon based on what I'm seeing here. Did anyone even say Shopify? Who said Shopify? Seconds to the launch. Unfortunately, I can't watch the launch. Bezos to the moon. I mean, can I watch it without getting smashed? I kind of want to watch it. Let me just see if I can get it up. These guys have never hit me for a... All right, here we go. Yeah. He's going. Look at him go. That's all we get? Where's the commentary? We need commentary, guys. Imagine if it exploded. Oh my god. That would be so crazy. Wowzers. Well, that's less interesting than I thought it would be. It's like a very blurry. I was impressed by the Virgin one. That was a lot cleaner.
look out the window. Oh, he kicked us. Oh, wow.
Do you guys hear that? Oh, so it's a live stream from them. Samsung says that was dark. Nah, it wasn't dark. It was just like, imagine if it happened. That would be terrible. Unlikely. Actually, I don't even know what the likelihood of it is. I'm scared by all aeroplane style things. So at this point, what are they doing exactly? So it all worked? I don't know what's going on there. Anyway. All right, guys. We will go back to the finance. I don't know what was going on there. All right. We've got Alpha T coming in with $2. Wall Street wants my money, so I won't sell my 1 year. Sell 1 Y. I don't lose. So you're saying that you are not going to sell your stock and you won't lose? Or is 1 Y some kind of stock that I don't know about? Absolutely, Alpha. You don't lose unless you take it out. That being said, sometimes you got to know when you got to cut them up. All right, speaking of things that are going problematic here, it's already coming back. Okay. Yeah. If it's already coming back, well, it's like the Virgin one. It was very short-lived. And that is the problem. So look, Bitcoin. Let's just quickly talk about this. Bitcoin is in all sorts of trouble. We obviously are at an incredible crossroad here for Bitcoin. The weekly close below, I talk about how that was super bearish to me. It's continued bearishness, which, to me is, again, pretty common when this kind of thing occurs. You've also got the US dollar strengthening, which is not really helpful to it. Look, if Bitcoin, let's say, actually gets exploded down, and if they do regulate, let's call the stable coins, again, I will say this, I am going to come back to the market and I'm going to be excited for the positions, but it is mission critical for Bitcoin to hold this level. I mean, it's already showing every piece of weakness you can throw at it. You've got daily lower peaks. You've got a new low on dailies. You've got the weekly closing at a new point underneath the 50. You've got everything going, oh my goodness, this is not looking good. I mean, what looks good here? What looks good? Nothing at this stage. And this is the time that I sit back and I chill. And I say, okay, let's wait and see another picture. Contrary to popular belief, not every single second of the day is the best time to trade. Sometimes you got to just chill back and take a break. So we've got the market coming in here exactly flat. It's about to come through. We've got Snowflake, which most likely is going to be slightly up. Let's have a look here. So Snowflake came through yesterday. Didn't quite make a new peak, but it did bounce there a little bit, 252.22. Okay. Got Enphase bouncing up because these are all hyper stocks. These are all the ones that did well last year. You've got CRISPR. So genetics did okay. So it landed. Oh, here we go. Let's watch this. Here we go. Woo! Don't know why that terrified me. Whoa. It's on fire.
First up, your booster has landed.
There we go, guys. I actually don't understand how this is working. What is this? Is this like a thing that just flies down slowly? Is that where they are? I don't even know where they are. I don't know anything about this particular one. Wowzers, that is so weird. It looks like a little UFO kind of floating around. All right, back to it. Let's have a look at SPLK. So that's not looking exceptional. QCOM, Semiconductors pre-market up, another one that daily bounced. Again, looks good. Let's go over to some of these ones, though, that did well during the time of course, the pandemic height. And that was one of the ones was TDOC. Now, I don't think it'll come through with the same vigor, but it's interesting to see Wall Street jumping on a lot of these ones yesterday with the bull. Now, where did they actually get into them? They bought them relatively all day, so they were getting into it. Tesla did as well as well. It did really, really well. So we've got here a trough, we've got a peak, we've got a higher trough, and then we've got our higher peak on the 1 hour. That's kind of like a sequence towards the bull side. We do have some level of support, which will act as a resistance around the 155. But I do think that this is showing that Wall Street is adding to these hyper stocks with this idea that the Delta strain is the concern, okay? That's where the money is going. You can see it in the price. You can see it probably also in the volume. The volume has increased a little bit here in recent days, and they switched it, and they started buying it up. They took out a lot of stops. Remember, this would have taken out heaps of stop levels, and then they've started converting back into the buys. So let's go to the Webull checker here. So we've got Piton really running now, 6.73%. Let's go to the screener, have a look at all the big stocks, what's happening there. Pre-market, we've got HCA Healthcare up 9.54. We've got IBM, Chipotle, Moderna, Twilio, Square. What else? There's CrowdStrike, Tesla, Zoom, all up. Apple, SE, mostly tech, it looks like. And on the downside, we have companies like Netflix. It makes sense that it's going to be down now. Actually, has Netflix come out with its earnings after the close today? So that'll be a very interesting data point that we'll check out. My view on the global sell-off, my view is fairly stable for now. I mean, my view is basically this. So all of the signals are saying bearish, or bears are coming. Bears are coming out of the woods. Banks probably is the one that's going to lead it. And then we're going into every single one of these are at neutral support. So basically we've got US 100, SP 500, US 30, and IWM all at exactly where it needs to hold. If we get another big bear day, big red day, you would have to think we're in the beginning of a further correction. I also think that no matter whether this rallies, over the next 3 months, we will go into a correction. I will call it a correction. It is unlikely to be the end. I'm telling you guys, it's unlikely to be the end. People that go, oh, it's going to be 50%, it's going to be 100%. There's only one way, and I can't even say it on YouTube. There's only one way that can happen, and it's got nothing to do with monetary policy and financials and any of those types of things. We've got $10 from Tyro Nabella with the yellow one. Monica Nakamura, Tom, many viewers would tune in Friday just to hear and see Tyrone. I look for his complimentary chatter, but he also brings eye candy. It's a win-win for your channel. Is this some kind of like, you're just loving yourself, Ty, or something? All right, Monica. We will bring Tyrone on if he wants to do Friday. I don't think he wants to do the Friday session. Tyrone, do you want to do the Friday session? You can do it, man. It's all good. It's all good. Yeah, so that's my opinion on things at this stage. I think correction at some point over this next 3 months, absolutely, in my mind, it makes total sense. And I've been talking about it for 3 weeks. I've been bullish many times before that. You can go check it out, especially this year, many, many bull times. However, at this stage, I am optimistic on rallies today. I'm optimistic on some trades. And other than that, I'm just kind of chilling because you know, what else can you do? I mean, you can chill, you can put puts in, you can put spreads in, but you haven't seen enough information just yet. You've got all the signs, but we haven't seen the confirmations at this stage. Not the confirmations you generally want for a proper correction to come through. Not just yet. What other stocks have been doing well? So we've got Tesla here coming in with a 0.74% earnings. 0.74% up. Tesla bounced again off the 630. It did do something that I think was pretty nice, which is even though it broke underneath that glorious trend line here, It gapped and filled that gap straight away. So I treat that as not really it's closed underneath because it gapped and instantly rallied. Now, if it gapped and held the short, if it came back here, I would look to short it off. But because it gapped underneath and then rallied immediately and closed at the high, it makes me think, okay, that's not, that's not bearish for Tesla at this point. You know where the bears take control though, 620 underneath that, it's going to get obliterated. Back down we go, all the way back into the 500s again, maybe 550 kind of area. Thad Hubler says 90% correction. No. Oh, he says you wish. Yeah, Silverliner. I just can't get behind 90%, man. I mean, look, and for the bears that want that type of thing, just ask yourself, do you want everyone to be depressed and miserable and stuff? Are you really going to be able to pull the trigger? When are you going to pull the trigger on a 90% correction? Are you in some kind of safety haven that you feel safe that way? I mean, if that's what you've planned for, then that's fine. But the problem is that the damage that does to us as humans, to the human race, to psychology, to everything, it's going to be so bad. Like, I used to think, oh, I want a correction. Yeah, I used to say I want to crash many years ago. And then I realized, you know what? I actually don't want to crash. That's pretty bad. I don't want the market to go hyper either. That is really bad. So we've got 2 minutes here off the market till open. Let's quickly dial in here on a few different stuff. So we'll be watching the US 500. We've got some kind of resistance supports on the fake market futures. Put the resistance in. We'll put the support in. We'll watch a few different positions here. Guys, you want to pick which ones you want to watch. I'll put Tesla in there for you. Everybody select stocks right now that we're going to watch into the open, and we will take a look at a few others. I've got asked a lot about Coinbase, so let's have a look at Coin. Let's have a look at Coin. 216. So you can bet your bottom dollar that Kathy Wood will purchase more coin today. She probably purchased some yesterday. I didn't look at ARK trades, but I think it's Kathy's ARK is the website. If you search on Google, it's a good one for finding out all of the stuff she's doing. So great support here for Coin. However, it's very reliant on Kathy Wood kind of purchasing it and Bitcoin not getting smashed. A few people want Nvidia. We can put that one up. And let's see what else you want. Nvidia down 74%. Split, trio, split. Silver says, just joking, I see 20% though. Yeah. That's very feasible. And look, there is an idea where it gets worse. There really is. Has Tom done Nvidia? Yeah. I mean, it's just a stock split. There's not much you can really do about it when you're going to this because it won't have rejigged the price for it. We're 1 minute off the open. Oh, actually less, 20 seconds here, guys. So we'll load up a couple of stocks. We'll bring in the Nasdaq and see. Actually, we'll probably bring in the Nasdaq and see how that trades. And here we go. Market open. Hyper stocks ruling the day so far. Let's get that opening bell. Congratulations, everyone, for making it to Tuesday. Let's see if today is statistical like it has been and provide us with the bounce. Tesla comes out here at 652. Wow, look at it. Looks crazy on the 5-minute chart. We've got US 100 rallying slightly initially and then coming straight back down. Remember, these are small time frames. 5 minutes on the bottom here. Nvidia will now rail that in to... I wonder if people sell this just because they're fearful of the split and they don't realize that that isn't actually a negative. I bet you there are some people, they're like, oh my God. Maybe they're hodling for dear life because they're like, why is it down so much? They don't realize what is happening. Let's look through all these stocks. So overall, it is a green day for the tech so far. Green. All the hyper stocks going green. Nvidia looks like 75% down, but as we know, it's a split. And they're probably the best performers. AMC, if you guys are still following that, around $35. A little bit of rally there in that one. And SPCE down. I guess they don't like Bezos coming through with the goods. Slight reds in the morning. But remember, it's not about what happens in the first hour, guys. It's about what happens at the close. And today is all about the close. I also think the middle of the day might show us action from Wall Street. So let's say they feasibly push it down early. If I was trying to maximum extract again, I would push down early. I would then rally the market. I would then continue to rally the market through the day, and then I would short it off tomorrow. That would be the maximum extraction. Now, I don't know how many people are already in the positions because I can't exactly see that data. But yeah, if I was looking at something, that would be the type of thing that I would be wanting to do from a psychological standpoint. We're down 0.18 on the US 100 early here. Tesla 648. 630 being the key resistance for it. What's the IWM doing? IWM is sitting on 0.11% down. Let's go around the actual stocks here, the big ones. Let's look at the percentage changes. So the healthcare stock here with earnings came out good. McKesson SE up 1.2%. Okta, quite a lot of those stocks. What's down the most? We've got Nvidia now rejigged here for 2% down. Obviously not 70-something% down. We've got Baidu, SAP. How are our banks looking? Let's have a look at the XLF sector. Okay, banks just hodling through. Very important that bank sector doesn't go. If you didn't see my video today, what kind of pattern is that, guys? Wowzers. What kind of pattern is that? We're on the precipice of financials showing us serious weakness. For anyone that doesn't know as well, the Chinese market can go absolutely opposite to the US market. They're not linked. Remember that. So the Australian market's kind of partially linked to both. However, the US market can do something totally different to the Chinese market. Not moving up like I thought it would, says Dr. Horton. It's still early days, Doctor. We're in the 15 minutes of retail fame. The first hour is retail fest. After that, Wall Street come over. It's like anybody. How many of you kind of look at the market for the first hour and then go and do your job and go do other things? Put your hands up if that's what you do. Do you look at it during the day? When do you do your trading? Do you do trading at the beginning of the market or do you do your trading at the end? I'd be very interested to know what you guys are doing. Head and shoulders? Yes. Dandruff free, says Sam Hine. Absolutely. Yeah, absolutely. AMC going up. Yep, 36.40. We'll look at that in just a second. So we've got left shoulder, head, right shoulder. Absolutely. This is a very strong looking pattern towards the bear side. Obviously, this is the strong area that we're looking for it to break out of. Hasn't quite done that. That would be quite negative, I believe, for the market. So we'll see how that one holds through. Let's move over to AMC here quickly as well. We'll remove that MACD indicator. Old AMC. Imagine if it double bottomed. So you got low, long leg doji. Possible decision made today. That'd be cool for the buyers. And if you get through the 3880 resistance, which is what we thought, you'd be double bottoming this and setting yourself up for, because the 20 would be there by that point, and setting yourself up for quite a decent amount of movement. Absolutely, that's cool. That would be a cool thing to see happen. I'm going to start covering AMC again for the next couple of days. We'll see how it plays out. I got disinterested when it went under here because, of course, what happens is we had very predictable movements, and then now we're more likely to be bearish than bullish. However, if the double bottom does break out, that could lead to an explosion again in AMC. First hour, power hour, says SW. Only limit... Power hour. Yeah, it can be. It can be. If you're reading it correctly and you see the switch, when they put the switch on, then you can certainly make some good money. I usually only watch the close. Par, you're on. In my opinion, one of the best things to do, but obviously not great. You can actually put positions in on the close sometimes if you see it close. Because, 1 minute, 2 minutes before the end, it's unlikely to fully split. However, that can also be bad because it can sell off mega. Sometimes you might see like a sell-off day, and we haven't seen one of these recently. And then as soon as the market closes, it just keeps selling off super hard in the futures. And often it can continue to dump. So it's more on the buy side that you want to see it. So you see like a nice movement, And then so you can take advantage of when it opens up the next day and go bullish, the close is actually the most important time. What happened to SWI? Let's have a look. Ooh. That's bad. Some kind of pre-earnings announcement. Wowzers. I remember this SolarWinds. Oh, is this a hack? Is SolarWinds a hack? Didn't they get hacked? I think it could be that. I can't even remember that. I'm pretty sure that's the company that got hacked, yeah, or something. That wasn't good for them. Let's have a look at one of my favorites, old Cloudflare. Look at it, so glorious up there. 65 into 104. Wowzers, not bad. So this morning, the real story is going to be about the close. Just to reiterate, US 500 is on support. The daily 50 exponential moving average is the key level, the most key level that we've been looking at. Once it got through the 20, yes, it was going to always gravitate towards this point. Now, from a statistical standpoint, if you look at every other time it's hit this 50 recently, it has generally bounced on this day. Now, if it goes bearish again, even if it then starts bouncing up, I think that is a very significant turnaround. Remember, our notepad here has bonds, bears coming, dollar index, bears coming, US 100, 500, 30, Dow 30, IWM, Russell 2000, all neutral on supports. And then we've got the 10-year, which is, of course, for growth bullish. And then we've got banks going bearish here and Dow Transports also bears. So there's a lot of conflicted signals, more bear signals over the next couple of months. But for today, I'm hoping for a rally. This was on the hack, says Francis. Yeah. Who the hell is buying Docu at $2.95? Not me. Not me, sir. DocuSign. It's done all right, though. It's done all right. What a rally. What a rally. Phenomenal stuff. Actually unexpected. I didn't think they'd rally this hard, but they did. And that's why sometimes you pick the right stocks, Nvidia, that kind of thing, and then sometimes you'll miss out on one. If you don't believe in it, move on to the next. It's very hard to get in this rally as well from a technical standpoint because it's such a quick one. You've got like that initial earnings into just mass explosion. You can take a few little pullback rallies, but yeah, other than this one here, it would have been tough to get into it. VIX is spiking. Yeah, VIX is going to remain fairly high here. Again, VIX will drop off if we see the market rally. If the market makes new lows, the VIX will get dominated. As in, like, it will just go crazy. It'll spike to like a 30 or something. There's that VIX. Okay, guys. Well, I'll leave you with that today. We're looking for the close above the 50 exponential for the US 500. I hope it can hold and it does bounce. It'll make quite a lot of technical sense if it does. We do expect this first hour to be a little bit random, and then hopefully the rally comes through with Wall Street later on. I'm looking for closes, like some kind of gap fill on the S&P 500, ideally. That would be the ideal kind of situation. We've generally seen it try to fill some gaps. But yeah, 50 exponential. Let's see if it holds up again. That's the one that we're looking at. Other than that, some of the stocks that did have some decent trades on them in terms of big options. We had Amazon, we had Google. They had some big call options on them for the next month of expiry. So we'll see whether those call options mean anything. TDOC and all of the pandemic style stocks are the ones that are moving. You can see we mentioned it before. TDOC is the one that is flying through, and it's coming back up to the resistances at this stage. Good luck, everybody, and we'll see you tomorrow. Make sure as well, if you want the 3 technical analysis cheat sheets, click the link up above or in the description down below. You'll be able to get that for free. And I'll also be bringing out a new cheat sheet over the next couple of weeks, which is which are the best months to technically be in the stock market, whether you're a bear or a bull. It's always good to have those types of bits of information, especially when you take them through history. So it's all about big data, actionable data, technical analysis, and then, of course, the basic understanding of fundamentals in the market and a bit of common sense. Thanks so much, guys. We'll see you tomorrow for another video and another live session. I wish you all the best. Bye for now. Yep, Russell 2000. Looking good. Catch everyone. No worries, everybody. Glad you enjoyed it. Thanks. If you didn't get the cheat sheet ARAQ, just check your spam. Your filter might be on for it. You definitely do get them. It's all, obviously it's automated, so yeah, you should have it. If it's not there,